Hello everyone, this is Steve with the Free Bullion Investment Guide. Today is August 16th. I'm doing a review and outlook price analysis video for gold and silver. It's been a week since I posted a video. In last week's video, I showed you these bull flags in silver's price chart and in gold's price chart, which we did have clearly some pullback on the about the 11th and the 12th. Mostly on the 11th, I believe, of August of last week in both silver and gold. Yeah, on the 11th, you can see the date down here when I put the marker right there. It was on the 11th that we saw the most pullback in silver and gold, and the 11th was Tuesday. But basically what I stated in last week's video is that I expected some consolidation in the price of silver. I didn't expect a pullback of this severity, but quite honestly, you have a price move up in this and any kind of asset, you're going to see profit taking and a pullback. Now, why did the pullback happen? It came about because there was the core CPI, I believe, came out. Consumer price index rose, and inflation just showed its head clearly because of all the money printing and all the accommodation by the Fed. It's going to show up in the market. For instance, I went grocery shopping this morning. I mean, the prices have clearly risen. I've been watching them rise on a regular basis. But the inflation ticking up higher made traders go into bonds, and when bonds rise, gold falls. I can show you here on the 10-year. The 10-year was what most of the market was paying attention to, and the 10-year just came up a little bit to look at the broader scheme of things. On the 10-year, it's been higher, but it's not going to get above 1% or more. If you ask me, there's just way too much debt in the market for the 10-year to actually make any kind of move to the upside, great move to the upside. There's been way too much debt poured into the market. If it does, it'll bankrupt the United States government, to be completely honest with you, and they can't let it go higher. They just can't. So the Fed will hold it down. And as far as traders making the move that they did, it just doesn't make sense to me. I mean, I realize it's a knee-jerk reaction. You have the 10-year move up. Oh no, gold's not going to be a safe haven anymore. People are going to pile into government debt, but the government is, I think, 27 trillion in debt now. The Fed has more than 4 trillion. It's probably higher than that. I haven't seen a recent data on how much debt the Fed is holding. So this kind of bump up and the knee-jerk reaction out of traders, out of gold and silver, to sell off the way they did is kind of overreaction. But again, we did have a strong move to the upside with gold and silver. Gold has hit new highs. It touched 2080 briefly. I don't even think it touched 2080. I think it went up to 2075. But clearly it has broken above all barriers. And silver, for that matter, is now staying above 26.25, which is strong support. It was strong resistance. Now that it's above it, is now strong support. I'm just going to expand these bull flags for both gold and silver. I do expect more consolidation out of both of them, but I think what we're seeing on the broader scale, which I want to move to the weekly charts. You've probably seen other people talk about this pattern. It's a technical pattern. It's called a cup and handle pattern. 1921 was the previous high for gold back in 2011. That's what that is. I'm just going to remove that right now. Actually, I didn't want to move that. I want to remove that. Anyways, cup and handle. Cup and handle, I did a DuckDuckGo, excuse me, search for cup and handle. I don't use Google anymore because I'm tired of seeing where I previously searched on ads on any website that I go to. So I'm just sick of it. I don't want to be followed. So, and that's, I used to be on Facebook. I totally am off Facebook as well, because it's just, there's numerous reasons why I got off Facebook, and that was one of them. But a cup and handle pattern, Investopedia has a good outline. You can always, I will put this link down in the description area below of the definition from DuckDuckGo, but you can click on any of these websites. But a cup and handle looks literally like a cup and handle in technical stock patterns, or in this case, gold and silver. And right now, I believe we're in the handle making of the pattern before we continue to move higher. So in gold has basically two of them. One is since 1980 in the making, and you could see it. I mean, you could make two patterns out of one here, really. One, you have the cup and handle in the making, which is over 30 years in its process before it continues to move higher. And the other one, let me show you the better one that is taking shape now, is right in front of our eyes. It's been taking place over the last 10 years or so, and right now we're in the middle of making the handle. As we pull back, do consolidation, and then we'll continue to rise higher. So that is what I'm expecting out of gold, and for that matter silver as well. Now silver, you could say the cup and handle is also taking shape. It's a little bit more shallow, but it will continue to go up higher as well. I did go on to, this is Trading Economics website. You can, the reason why I jumped there is because Trading Views charts only go back to 2007, I believe, 2006, and all of the other options that they give you for silver also don't go back as far. But Trading Economics does have a silver chart where you can see, like in gold, both cup and handle. So this is silver's price chart. This is the larger. This is from 1980 and back, all the way back to 1975. Let me see here. What am I looking for? Here I can show you also another cup and handle. Right here we have it. It's taking shape and it will move higher. And then if we go to the 10-year chart, we have, again, it's a little bit more shallow, but it's a cup and handle no matter how else you look at it. Maybe, quite honestly, what will happen in the long run is we will continue to move up, have some bull flags taking shape, move up, and then we'll have a big handle come into play, and then we'll continue to move up higher, because there's nothing holding back silver and gold. The 10-year moving up a little bit isn't going to hold back silver and gold. And on my website on Friday, I made note of a article that came out that said that Warren Buffett bought Barrick Gold, which has some weight to it. I'm not one to ride on the coattails of Warren Buffett, because technically he's always said he hated gold, and I would only see him moving into gold through stocks. He doesn't, he's called it numerous things in the past, which I'm not going to repeat. can't quote him exactly. I know his a good friend of his, I think his last name is Munger, Charles Munger, has said something along the lines that it's a pet rock and so on. But physical is definitely, in my eyes, the best way to hold gold. But I would see in Berkshire Hathaway's best way to hold gold is to make money off the dividend, to see the stock price rise higher. But either way you do it, it's all backed by the price of gold. So whether you buy a stock, whether you buy an ETF, I personally would buy the physical first, and then once I had my allocation into physical, then I would move into stocks and other. I don't like ETFs, but personally I would move into mining stocks and after I had the amount of physical that I wanted on a personal level. But how you do your investing is how you do your investing. And I am not here to tell you what to do. I just give you my opinion on what I expect out of silver and gold. And that is what I expect out of silver and gold. For more consolidation in this bull flag area for silver, this is where we're at right now. We have support. I was very surprised to see silver drop below 26.25, but it now is sitting basically right above it. I mean, it could fall below it, but that's unforeseen right now. But I see a bull flag taking shape. Somewhere the price will continue to trade inside the bull flag and before it moves higher. And same with gold. Gold will also move inside this bull flag before it moves higher. Gold has support right now at 1850. It will likely, the next catalyst, something in the news, may drive it above 2080. But right now, 2000, now that it's below 2000 will need to be broke again and held above it. And for silver, silver, 26.25 is sitting right now just slightly above it. $30 will have to be broken before clearly it'll need to break the bull flag here and just to move higher. What will cause it to move higher? It could just be regular trading, or it could be some kind of something comes out in the news. Who knows? As far as the MACD and the RSI for silver, the MACD is kind of showing that we're in the daily chart. It's kind of showing it's in overbought territory. The RSI is basically saying it's in neutral territory. So again, between the two of those, I would say expect consolidation before we see a rise. And for the price of gold, it's the histogram chart here, and the MACD is saying that it's an oversold territory, but clearly the signal lines are showing that it's still in overbought territory, but they are, the further apart that the lines go, the more likely that they're going to change and cross back over again. So they should start to come together again, and the price should move up. But again, I expect simply more consolidation before we see a rise to the upside out of gold and silver. And that is this week's review and outlook for the free Bullion investment guide. I thank you for your time. Take care, and God bless.